Okay, Bruce, I'm going to be able to allow you to talk there. I'm just going to unmute you.
Hey Shannon, how are you?
Good. There we go. We're getting it all happening. Great.
I was waving my arms, but that kind of doesn't work these days. So.
No.
I hope everybody on this this webinar is well and healthy. On behalf of the Committee for the Mornington Peninsula, enormous respect for what you and we're all navigating at this time, a tumultuous time, and our local enterprises are really at the pointy end of it. So maximum respect. Be assured of our advocacy on your behalf. Please share with us insights or things that you think we might be able to do on behalf of the employing community on the Mornington Peninsula and all those livelihoods that depend on it. Let us know if there's a voice we can bring, some ideas and input that you have. Today, we are very fortunate. Shannon Smit, who's also a director of the Committee for Mornington Peninsula, but for today's purposes, more importantly, founder and managing director of Smart Business Solutions, will be our presenter. Now, Shannon, she has cast a big shadow in the accounting world right across the globe, having been a part of leading accounting firms, not only here in Australia, but in Prague, Amsterdam, and New York. And of course, all those roads inevitably lead to Mornington. So thanks, Shannon, for joining us. A long-time Peninsula resident. She's come back from overseas, from those large company practices, to now run her own business here based on the Peninsula, and is passionate about our region. Founding member of the Committee for Mornington Peninsula and a founding board member, and one of Australia's best tax experts, appointed to the Australian Government's Board of Tax Advisory Panel. I should declare a pecuniary interest. I think I did that, didn't I, Shannon? And
yes, you did. You flicked my details across, and next minute I had a call from Treasury.
Well, it was one of those things where big firms were putting names forward, and for some of the names coming forward, I can't remember the last time they might have actually seen a client directly. So,
yeah, or let alone lodged a BAS or done anything like that. Yeah,
exactly. So Shannon's with us. She's well across all of the small business incentives, what the asset write-off opportunities look like, simplified BAS, also where the small business turnover definitions and thresholds has moved, and assistance with workforce and basically keeping a pulse in your business. There's been a lot going on. We thought the best thing we could do is share that insight and expertise, and there's few I can imagine who'd be better positioned to do that than Shannon. So Shannon, thank you and to your team for making yourself available. I'll hand over to you.
Okay.
And invite our audience, if they're not on mute, to put themselves on mute, and there is a machinery in the technology to feed in questions. Thanks, Shannon.
Great. Thanks very much, Bruce. Welcome everyone. Thanks very much for coming today. Everything today will be current as at last night when I pulled these slides together, and I say that because I have presented a lot over the last week. And over the last week that I'm continually going in and changing the slides and updating as more clarity comes through. So I will mention some of those issues that have gone over in the past week and where things may have changed. But you may have heard from, whether it be from your accountant, you may have heard from a friend, what some of the rules are, and they have changed a bit over the past week, and I think we'll continue to do so. I will be happy to take questions at the end. Feel free to put the questions into the question box as we go along, and then as I go through at the end, we'll answer any questions and hope that I can answer any of those questions. Some of them still may be unknown. We have put on our website at Smart Business Solutions, you will see we have a lot of blogs that we've put up with a lot of these details. So I'll go through these today, but there are also a lot of blogs there, and we've got an ebook going up today which will contain a lot of this information as well, because there is a lot out there, and we're just trying to pull it together and make it as easy as possible. So welcome. I'm going to go through. I now have JobKeeper to go through today as well, so I'll get started. So what I'm going to look at is the economic stimulus packages that are available, looking at some of the bank assistance. what is the Victorian government packages, what are some of the ATO administrative concessions, and then look at what have we got next coming through. So if I start off with the stimulus, there's the tax-free payments of up to $100,000 for employees. What I've done with all of these different stimulus options is I've tried to, you know, basically cut to the chase, you could say. What is it? What do I get? When do I get it? How do I get it? So I really want to get it so that you can actually pull out, we'll get to the facts. It's all nice that we've got a lot of detail here. What is it? In this instance, so the tax-free payments for up to the 100,000, you can get a minimum payment of 20,000 and it's up to 100,000 for eligible eligible businesses based on your PAYG withholding. Now, I will go in a bit more detail on that in the next few slides. So you get, so it's eligible employers based on your wages that you're actually paying to your employees that are being, and it's the PAYG withholding tax. Now, there can be some confusion around that because there are, a lot of people will talk to you about PAYG. There is PAYG withholding, which is the employee related tax. This is the one that's withheld from your employees when you then pay the net pay. There's also PAYG income tax, which might be, as a business owner, you might be paying that on a quarterly basis, either in your business or personally if you're receiving income. So what we're talking about here is the PAYG withholding that you've withheld from your employees. You may be eligible also, even if you pay salary and wages, that you actually don't have any requirement to withhold tax. So you may have casual employees that earn under that certain threshold that you don't need to withhold tax. You will still be eligible and you'll be eligible to receive a minimum payment of $10,000. The payment's going to be delivered as an automatic credit onto your activity statements from 28th of April, which will be processing for the BASs. So that'll be coming through now. I'm already seeing ourselves, a lot of clients, you know, we're talking 2nd of April and they've already reconciled. It's the first time a lot of clients have actually been reconciled within a day of month end. So I think we'll see a lot of BASs being lodged early, but the payment is restricted as to when that's going to be credited. So how do you get it? It's lodgement of your March BAS and then also your ongoing instalment activity statements and also your BASs. And it is a credit against your ATO account. What is some of the fine print? So it is for eligible businesses with turnover of less than 50 million. That will cover a lot of us down here on the peninsula, no doubt. You need to be an active eligible employer and the business needs to have been established prior to the 12th of March 2020. Now, I have put in red here, when these rules first came out, I have to say as an accountant, we got pretty excited because of situations where you have a client who is a director of a company, doesn't get a wage through the business, or maybe they have a family trust, they get distributions at the end of the year. So I actually looked at this and thought, well, maybe we recharacterize those payments. When the laws came through, there are specific integrity rules. So basically they're looking at anyone that recreates, creates, moves, changes a wage to obtain a further benefit in relation to this cash boost is basically not permitted, and the accountants and bookkeepers shouldn't be facilitating this as well. And this has quite strongly come through in the legislation, and the ATO has come across very strongly on this part as well. So it is an integrity measure that they are wanting to provide this cash boost to businesses, but they don't want people out there overinflating wages unnecessarily since this has been announced. So when do I get it? I've just put it together as a table, and after this webinar, we can send out the recording as well, so you'll have that. But basically looking at if you are a quarterly lodger, so you lodge on a quarterly basis and you have your January, February, March, and you lodge it as a BAS through each quarter, your lodgement due date is the 28th of April, and then obviously for June is going to be 28th of July. And this is when we're going to see, it's your lodgement due date that's going to trigger the credit that's going to go onto your account. If you are a monthly, you will actually be looking at the 21st of each month, which is the standard that you've got at the moment. When we get into the second round of the payments, where you're actually going to be having quarter 4 is the June one, which will be the lodgement due date is then in the 28th of July. So you're going to be getting when you get your payments, they will be looking at what is your, if you're a quarterly BAS lodger, so you don't lodge on a monthly basis in, say, January and February, they will look at what you're lodging on a quarterly basis in March, what was your PAYG withholding during that period, and then it will be times by, grossed up basically for the 3 months, so it will be times by 3, and it will be then credited to your account for the March BAS. It'll be credited on the 28th of April. For the June BAS, it will then be credited, what you actually pay for that period will then be credited on 28th of July. If you're a monthly and you lodge your monthly one, that's when they'll times it by 3. So if you're a quarterly BAS lodger, you'll get what is in your BAS for that quarter, what was your PAYG withholding. If you're a monthly, your March BAS will be the PAYG times 3. This is actually unfortunate for those that, especially in the hospitality, that January and February may be actually higher wage months because of the fact of the extra casual workers over the holiday periods. But unfortunately, it is based on the March PAYG withholding. That will be times by 3, and that will be paid in on the 21st of April as a credit onto your account. When you lodge your April IAS and your May IAS, that will then be credited to your accounts. What happens once we get to June 30, and so you've lodged your June BASs as well, it's depending on what that amount was that you were paid, and it can be a minimum of 10,000 because you may have had no withholding, or under 10,000 PAYG withholding, up to a maximum of 50,000. When you, whatever is paid between that period will then be paid across 4 payment periods in the second round of that, which is from 1st of July. So it will mean, if you look here, your BAS for June, you will get an extra equal payment paid in July in addition to the one up here. Now I'll just go on to the next one, and this might give you a bit more of an explanation. So if I break this down and put it into different categories for you as to the types of different taxpayers, and you can see which one is relating to your business situation. So if you are a monthly lodger under the maximum, and the maximum meaning 50,000, which is the maximum that you've got available. If your March, I guess the PAYG withholding or the instalment part of your March BAS is, say, for example, $5,000 is what your PAYG for the month of March is. It will be times by 3, 15,000, and this credit will be then applied to your integrated client account, so your tax office account. You then process your pay for April. We have 5,000 again that you've actually paid. You'll be entitled to another 5,000 again for May and June. This comes to a total of 30,000, and it's this 30,000 figure that then is divided by 4 periods and paid in equal instalments. You need to keep your lodgements up to date, but basically it is paid in equal instalments across those 4 periods. So as I mentioned before, it will mean in July you will actually get 2 credits across here as well. If you are a monthly lodger and you pay over the maximum, so you actually you're at 50,000 or even higher than 50,000, let's just say you had 12,000 was your PAYG withholding for the month of March. This will be times by 3, and you will get a credit of 36,000 onto your integrated client account. In April, you pay again another 12,000. You've been able to maintain the staff levels. In May as well, but in May you've already used up then your 50,000, so you're actually only going to get 2,000 as a credit. And then for your June, when you do your BAS with the PAYG withholding, you're not going to get anything more because you've already received the 50,000. Once you're entitled to the 50,000, again, this will be spread over 4 periods, and you'll receive this in credit to your integrated client account with the tax office over 4 equal periods. So if you are quarterly under the maximum, now the reason I say I haven't got a one where I'm showing you quarterly over the maximum, this is because if you were over the maximum, you would be on monthly lodgements. The monthly lodgements is when you exceed a certain threshold on the amount of PAYG withholding. So if you are quarterly now, so you lodge a quarterly BAS, you have in your March BAS, you have 15,000. 15,000 is lodged in for your March BAS. You will get 15,000 as a credit, and your credit will be applied on the 28th of April, which is your lodgement due date. Whereas those that lodge monthly will have that just a little bit earlier. And then again for June, you'll have your 15,000, so you'll get entitled to a total of 30,000. If you're entitled to 30,000 based on this first round, you could say this is the pre-June 30 round, then you will be entitled to another 30,000 post-June 30, and that will be split into equal payments as credits onto your account. Now, if you actually, I call it a potential refund, that's only if you have a situation where it does go into a refund situation. There has been a bit of talk around here as to whether businesses can access this if they do have a tax office debt, because really this is then just reducing the debt that they owe the tax office, not really giving them the cash boost that many of them may need at this time. So there is some discretion around that, and there is still talk about that situation in being able to go to the tax office and requesting that refund. But I don't believe there's 100% clarity on that at this point. If you have a situation where you do not withhold any PAYG, maybe you have a lot of, whether it be students who are only working a certain amount of the year, and so they don't actually have the PAYG withheld. If you have that situation, you'll actually still lodge your BAS, you'll have your wages in there and in this case I've got here 0 PAYG withholding. So if you have 0 PAYG withholding, you will still be eligible for the $10,000 credit, and then that $10,000 credit will be applied to you over the coming 2 months, the coming 6 months as well, split equally across those 2 periods. So that's our the cash boost situation and on how they're trying to get their cash back on that one. Now, the latest one that's just come out that I have to say my phone and email box have just got a bit crazy on is the JobKeeper. So this is not law. So there's a lot of questions being asked by people. It is not law. We have put up a blog on our website. We've updated that blog actually a few times. We keep editing it for the changes that have been updated by Treasury on their website. It is not law yet. It will be law soon. What that means is until it's law, there could be some last minute changes because some of the incentives that have come out have a few more questions than they have answers on some of that. So what they're trying to look at with the JobKeeper is that businesses that are significantly impacted by the coronavirus outbreak will be able to access a subsidy from the government to continue paying their employees. It does include self-employed. Now, a lot of you may have seen that self-employed people really missed out in the first round with the PAYG withholding. So this does include self-employed. So the purpose of this is to really keep businesses and people engaged together rather than the stand down that we've actually probably seen. The first time I've seen a stand down in a very long time. So what do you get? The government will provide $1,500 per fortnight per employee for up to 6 months. And how do you get it? You need to assess your eligibility, register your intent via the ATO website, and then payments will be received. Now, the payments won't be received until about May, and so I will address, there will be some questions coming up on this part as well. So some of the points to look at on this, we have an eligible employer. So you do need to assess, am I an eligible employer, and have I actually experienced a downturn in my business, and how am I going to prove that? Now, actually, just in the last 24 hours, Treasury has gone on and added extra wording on what that means, and they have actually, I guess you could say, relaxed the wording around, well, what is that 30% reduction or expected reduction to look like? So it is going to be something that the Commissioner can also then use their discretion on it as well. I suspect that how this will be from a measurement perspective, or how they'll be able to track this, will be in future months when they're looking at BASs and comparing periods across various periods. You know, you are going to have situations of businesses that have really grown significantly in the last 12 months. And so, yes, they may drop off now, but how does that 30% compare to last year? So there is going to be some flexibility around that part, and I expect the law is going to be a lot clearer than the guidance we have at this point. Once you've assessed that you are an eligible employer, then you need to look at whether your employees are eligible. Now, it's looking at full-time employees, part-time, casuals, and there are requirements for the period that they've already worked with you, and the situation around that. So you will need to go through and make sure that each of those employees is eligible. As I mentioned before, this is applicable for businesses without employees. So what we're looking at here is basically for sole traders where they've experienced that downturn as well. So some of the questions we've been getting, and I thought that you can read a lot of the information on this. We have outlined it very clearly on our blog and our website. There's other websites obviously with information, but some of the key questions that I keep getting from clients, I thought it was useful to go through today with you all. What is it in relation to wage payments, and then also super have been the key questions that I seem to keep getting. Now, all of these, all of this money, this $1,500, it is all taxable to the employee because it's not a subsidy to the employee. The employee is still getting wages, so that is all taxable. And there's this $1,500 is basically pre-tax. If they need to pay tax on their income because of their level of income, they will be paying tax on that income. And then in relation to, it's actually a subsidy to the employer, not the employee. So it's not, in a sense, tax-free income to the actual employee. And then in relation to superannuation. On superannuation, I've just gone through a few scenarios here. So you've got a situation where the employee is still working, earns more than $1,500 per fortnight. The employer has satisfied the eligibility, so the business has gone down. And I guess part of having this subsidy means that an employer may make the decision to keep that employee on because of the fact that they're now getting that person's wages subsidised by $1,500 per fortnight. So the employer receives the subsidy, and superannuation is still required to be paid on that full amount because that is a subsidy that's come across, but the full wage, because they earn more than the $1,500 and they're still paid that wage, they will be superannuation on all of that. If the employee is still working, earns less than $1,500 per fortnight, and the employer receives the subsidy on it, topping up the employee's wage. So there will be situations where you find some of your employees are actually getting a pay increase, which is probably quite ironic, this situation. I tried to understand the purpose behind it, and I felt that it was probably in relation to keeping some, maybe it's the economy going, or keeping in employees with that extra income. That lower paid employees tend to spend a lot of their wages that they do earn, and whether that was the reasoning for it. I'm sure maybe with the legislation we'll get some more clarity on it. But I was surprised that people would be getting a pay increase as a result of this. There is no superannuation, so on their normal part of the wage, so they were still working, there's super payable on that if applicable, but no superannuation payable on the top-up payment. If the employee has been stood down, their employer must pay the employee a minimum of $1,500 per fortnight. There's no, before tax, and there will be no superannuation required on that. And again, similar situation, if they were employed as at 1st of March, subsequently ceased employment, and then they've been re-engaged, they will be able to receive that as well. So a lot of the details around the JobKeeper, there's a lot of information out there, but until it's law, none of us can be 100% certain on all the different aspects on it, and we'll know very soon with that. What I do know is that the payments are expected to be coming through in May. Another question that I have been receiving, and again, we'll wait to see what comes out in the law, is that employers are asking, well, should I be recording that now? I've applied for it. Should I be recording and paying the employees? I don't have the cash to pay them today. So how can I pay them today? And the tax office is paying it after the fact. So I know that we don't have 100% clarity on that, but I do have clients that are actually saying, well, I'm just going to have to do an IOU with employees because I don't have that cash available. So hopefully there's something that we can come to a practical solution on that issue. So what have we got in the way of supporting apprentices and trainees? Now, this is all starting to flow through now that I've had clients been receiving and getting this starting to process through. So what is it? Employers with less than 20 full-time employees who retain an apprentice or a trainee, and you must satisfy those requirements. There's a little bit of fine print, but if you do have an apprentice or a trainee at the moment, that should ideally qualify. You will be, what are you going to get? You're going to get 50% of the apprentices or the trainees' wage paid during the 9 months. It's rolling back to 1st of January of this year to 30th of September. And the maximum over that 9-month period is going to be $21,000 per eligible apprentice or trainee. How do you get it? This is not one for your accountant or anything like that. You need to register for the subsidy from early April. Final claim forms before December. I would assume people will be getting in there quite quickly. And do contact whoever you deal with in relation to your apprentices if you do have a special organisation that you're dealing with. If not, contact the Australian Apprenticeship Support Network and they will be able to point you in the right direction on that one. The next one we have is the increase in the instant asset write-off for thresholds, the threshold. So this is where the depreciation asset that you have at the moment, the threshold is if you buy an asset for your business, you can get, you can write off 30% up to, $30,000, up to $30,000. You buy a piece of equipment for $30,000, you get 100% tax deduction in the year that you purchase. So we're really trying to match the cash going out with the ability of being able to get a tax deduction. That has been increased to $150,000. So what that means is you need to have the asset, it needs to be installed ready for use, or you've actually purchased it from 12th of March. So that's when they actually announced this through to 30th of June 2020. I know a lot of people have said to me, well, to be honest, I'm actually probably not in a position to go out and buy some of these assets at this point. That's going to be the last thing on my mind. Where some of the benefit, I guess, has come with this, if you've actually had a strong financial year to date at the moment before all of this happening, and you were intending, so I always say to clients, there's no point just because this incentive is available to go out and spend money when you don't need it. But if you were intending on replacing your car, you can actually get the car now. Just note that cars do have a depreciation cap of just over $57,000. So you won't be able to buy that $150,000 car and think you're getting a tax deduction for that. There is a cap of just over $57,000 for motor vehicles. But if you did need to get another motor vehicle over the coming period, this may be a useful option for you if that car is more than what was traditionally the $30,000. The other thing to think about, and this is where there can be an opportunity for you, is if you do need that equipment, is if you finance that equipment, let's say you've had a decent financial year to date before all of this happened, and so you're going to be having tax payable, and you do need a certain piece of equipment or a new car. If you obtain finance for that equipment or finance for the car, you could potentially be paying it off over, would it be 3 years if you take one of the new loans, could be over 5 years, yet you'll get 100% of the tax deduction before June 30. So you can actually see that you will get a cash flow benefit in this coming period from that, because it'll be taxes that you wouldn't have had to pay at the end of the year. So there can be a benefit. Do make sure that your asset does satisfy the requirements. Like everything, there's always a bit of fine print. So do check with your accountant. You don't want to buy this asset and find that that's not qualified. The other one, which I don't think we'll see this as much being used, maybe with some of the larger companies, but not as much with small business, is the accelerated depreciation for new assets. So what we're looking at is those assets that don't qualify for the instant asset write-off. So at the moment, we're looking at those assets that are more than $150,000. So this could have to be a very large piece of equipment that you're looking at buying. You can actually apply a depreciation rate of 57.5% in the first year instead of the usual 15%. So that's going to be a big deduction coming up front now. as opposed to waiting for later. Again, do check that your asset does satisfy all the requirements on that. But if you are looking, I did have one client that was about to buy a big piece of machinery, $200,000 worth. So we're over the 150,000. This has been a huge benefit from their perspective, and has accelerated when they wanted to buy that. Now, early access to super, I have to probably say I'm not the biggest fan of this one, but, you know, I guess there's the options that are out there. There's always been a hardship availability on your superannuation. They've just made it a bit easier to access your superannuation now. What they're basically saying is that if you were made redundant, your working hours were reduced by at least 20%, or if you're a sole trader, the business was suspended and there was a reduction. So what you're able to do is access, provided you satisfy the criteria, you're able to access up to 10,000 of your superannuation entitlements before 1st of July 2020, and a further 10,000 from 1st of July 2020. So the only reason I say that I'm probably not, and it depends on your specific personal circumstances, my only concern on it is that, you know, we are all trying to build up our funds for retirement, and that is actually only at 9.5% obviously of wages, and you are going to have to prove hardship. So this is not an automatic that you're going to be able to get it. You are going to have to satisfy one of these criteria, but you're pulling the $10,000 out, and then I know that there have been some emails going around and talking about loopholes of being able to pull the money out and recontribute it back in. But I think I'm sure we'll see some integrity measures coming out on that one as well. So how do you get it? Individuals, you can go to your if you've got a retail super fund, so, you know, it could be an AMP or Australian Super or something like that, you can register at your MyGov account. Make sure, and you have to certify that relevant eligibility criteria, that you have satisfied that criteria. Do the rules differ if you've got a self-managed super fund? You will actually have to, and we haven't received guidance on the actual documentation that the auditors are going to require when you, with your self-managed super fund, but you will have to apply to your self-managed super fund, which is probably yourself as the trustee director, and make sure you've satisfied those requirements. There was earlier talk that these withdrawals would be taxed. They are actually tax-free withdrawals that are available. Other small businesses, sole traders, as I talked about, they are eligible for the JobKeeper. And then you've got companies and trust businesses where the business owners don't pay yourself a wage. Now, what you've got available, increase in the asset write-off, as I've talked about, accelerated depreciation. There is the increase in accelerated income support, which I'll touch on in a second, and the SMSC guarantee scheme. Also the early access to superannuation. Now, I have updated this slide. Over the last few weeks, I've been putting a lot of pressure on Treasury at the fact that we have a lot of businesses that don't pay themselves a wage, the directors or the beneficiaries. And at year end, we distribute through beneficiary distributions, or we do dividends to them. Unfortunately, those, despite they were listening to some of what was going on, they have not changed anything in the legislation. So at this stage, we can't recharacterise those payments as wages at this point to assist them with that, receiving that cash boost. Other stimulus packages available from an individual perspective. We do have the coronavirus supplement of $550 per fortnight. The expanding access and eligibility to certain income support payments to make that a bit easier. Tax-free payments of the $750 to eligible recipients. Again, the early access to superannuation. And then the other one, which may be useful for those that are in pension phase, is the reduction in the minimum drawdown amounts from superannuation pensions. Now, obviously, a lot of superannuation funds have taken a huge hit. I've seen many of them down 20, 25% in just the last 3 weeks. Those that are in pension phase are required to take a minimum amount of pension from their superannuation each year. And now you've had a reduction in the value of your actual asset base in your super funds. So they have halved the minimum drawdown amount, which may be beneficial for quite a number of people, not being under the pressure of having to sell and maybe some shares within their super fund, realise it just to get the cash to do their minimum drawdown. So do speak with your financial advisor or on that issue if that is relevant to you, as to whether you're the minimum drawdown, if you're wanting to reduce that from what you had originally planned. Some of the bank assistance that's available. So the government announced what they called a coronavirus SMSE guarantee scheme. I can say this week, I think all of the banks are pretty much on board with this now. I know last week a lot of them were still not clear on what these rules were going to be on their side and how they were to proceed, but I am seeing loans coming through with clients now. The government is basically guaranteeing 50% of the new loans, and they're short-term unsecured loans. Need to satisfy the criteria like everything, but what do you get? It's going to help you with working capital, but remember, at the end of the day, it is a loan. It is going to have to be repaid over a 3-year period, unless, of course, you refinance it at a later date. The maximum size of the loan is $250,000 per borrower, and the first 6 months will be a repayment holiday. You will still have to repay it. It just means the first 6 months. So it's really going to give you that extra working capital to get through this time, especially for those that have lost a significant amount of income. The loans will be subject to the lender's credit assessment, so you can go to your existing bank or another bank, whichever you prefer, and then ask them about these loans. But because 50% of it is going to be guaranteed by the government, that's going to make it easier to obtain some financing on that. So we have put some of the bank details up here, but each of your banks, call the banks and just have a chat to them as to what they might be able to do for you. Payroll tax. Now, those of you that pay payroll tax, it is the worst tax. I mean, you get taxed because you're employing people, which is crazy, but that's probably a discussion for another day. What they've actually allowed on a state government basis is that those with taxable wages of up to $3 million will have their payroll tax for the current financial year waived. So any payroll tax paid since 1st of July 2019 will be refunded to you, and there's no requirement to pay any more payroll tax through to June 30. And you'll still need to lodge. You'll still need to continue to lodge your payroll tax each month anyway until June 30, but you will get a refund. How to get that, I put a blog up on our Facebook, it's probably our website too, how to apply for a refund. If you log into the SRO website, it's on the left-hand side, and it says under your normal payroll tax login, apply for a refund. Now, when I did this with a few clients a week ago, there wasn't, when you had what's your reason for doing this, there was no drop-down box for the coronavirus. I can't remember which one we selected, but we just selected the one that seemed the most appropriate. But I know the payments have already started, so a lot of my clients have already received payments back over the weekend, refunds of their payroll tax. So business grants. Now this one has now grabbed a bit more momentum. It came out, I think it was over the weekend. There are 30,000 grants of $10,000 each available to eligible businesses affected by the social distancing restrictions. I strongly recommend anyone that's on this webinar, please go on and register for this if you have been impacted. I want to make sure that the state governments see the predicament that the Mornington Peninsula is finding themselves in, not only because all our people from the city came and thought they'd social isolate down here on the peninsula, but I really want them to see that, you know, our area has a lot of tourism down here and we have been significantly impacted. So please make sure you go on. You actually need to log on there and register your interest. You will potentially get up to $10,000. I think they're going to be having to field through how they actually give that $10,000 and to who. There are 30,000 grants there, but I really want to make sure as many of our peninsula businesses are some of the first to sign up for that. So please forward that link on to any small businesses that you know that have been impacted because of shutdowns, beauty businesses, you know, hospitality, anything like that. And so we can make sure as many of our local businesses can get access to this, because this is a state government in addition to the other federal, and really help our small business get through this tough time. Land tax. Land tax, they're not waiving the land tax, unfortunately, but what you can do is get a deferral of your 2020 land tax payment. So if you've already paid, you can get a refund. Again, just go to the SRO website where you've paid and fill in your payment details and ask for that refund. So they're basically giving you additional time to pay land tax just to reduce the pressure until March next year. Liquor license fees, so your renewable liquor license fees for those that have a liquor license, you'll get a refund if it's already been paid, or the fee will be waived. So just contact the Victorian Commission for Gaming and Liquor Regulation for your refund, or you'll have the payment waived. Now, the ATO administrative concessions, I have to say, I do have to give some kudos to the ATO. Seriously, I know that probably most of us, when we say ATO, it comes with a big sigh and that kind of reaction. These guys have really stepped up to the plate. I mean, I'm sure we've had a direct line with them for the last few weeks, but they have just obviously been inundated, and they have just been incredibly helpful with so many of our clients. So I really can't, praise them enough for the way they've stepped up in this situation and the empathy that they're showing towards small business. They're deferring payments relating to activity statements, income tax assessments, fringe benefits tax, for up to 4 months. I've actually seen them deferring a lot of them up to 6 months with no questions asked. They're allowing businesses who report GST quarterly to swap to monthly to access GST refunds if that's of benefit to them. There are normally rules and requirements around that, so this is a great benefit to get that money coming back to them. Now, I mentioned earlier about the PAYG withholding tax, so that's your employee-related one. There is also that PAYG income tax. So if you own a business, you get a dividend or you get distributions and you pay personally PAYG income tax installments, or your business as a company that pays tax every year pays PAYG income tax installments, you can vary those down to 0 for March quarter. Because when you're paying PAYG income tax installments, what you're actually doing is you're paying the expected tax that you will pay on the year ended 30th of June 2020. Now, they're going to allow you to vary this down to 0 for the March quarter. You'll be able to vary it down for the June quarter as well. So you'll have no PAYG income tax installments payable. You can also get a refund for your business side, a refund for the PAYG income tax installments you paid in September and in December. Now, it doesn't mean you're not going to have to pay it, but this is for your year ended 30th of June 2020. Most people, your tax returns due, say, May of next year in 2021. So if you do get a refund for these or vary it to 0, when you get to doing your income tax return for 30th of June 2020, when you get to May next year, if you're lodging in May or earlier, you'll still have to pay the tax at that point. It's just giving you some more cash flow or easing cash flow at this point now. They are remitting interest and penalties incurred after the 23rd of Jan 2020, which have been applied to ongoing tax liabilities. Now, normally, if you do have a debt with the tax office, once you've paid it off, we often go back to the tax office and say, please, we've been a good taxpayer, we've paid off our debts, can you please remit the interest and penalties that you put on our debt for the last period of time? And the tax office very frequently do remit those interest and penalties, but they only do that once you've fully paid the debt. So what they're going to do from 23rd of Jan this year, they're going to actually remit all interest and penalties on that without waiting for you to pay that back. They are allowing businesses also to enter into low interest payment plans for the existing or ongoing tax liabilities as well. The ATO did make a point though, and this is very important, that employers do need to meet their superannuation guarantee obligations. Reason for this, just to give you probably a little bit of background on this, is the ATO administers the tax laws and they administer the superannuation guarantee, but they have no ability to waive any of that. So they're basically just literally a collector when they're dealing with superannuation guarantee. They actually have no authority or ability to do anything else other than collect the amounts and enforce if you haven't paid. They can't waive or do anything else like that. So they have actually said, we don't have any ability to change that, so you do need to pay. They will also look at certain individual situations and will tailor things for clients. And this is where we've seen them be really great with a lot of our clients when we've asked them. Now, we are doing some upcoming webinars. So if you are wanting to look at working a bit more on your business, you can check out some of our upcoming ones. Last Friday was my first webinar. I didn't tell anyone until the very end after, we had 87 people on it. But, I've been talking about for a long time of doing webinars. We often do our lunch and learns, which I'm a bit of a face-to-face workshop type of person. So we do those once a month on specific business-related topics. Now we have these situations that we face with this coronavirus, and I guess there will be things that we change in our business. And one of those things that I've changed in our business is now I'm doing webinars, which is something I've been going to do for a while. So I guess I look at it, we are going through a lot of change. We're all experiencing it in different ways. And I think it's going to be how we all react to it and how can we reinvent ourselves. So tomorrow I'm doing one on business continuity planning and what that means. Next week, we did do a workshop a few weeks ago on cash flow planning in difficult times. That was a face-to-face workshop. We're going to run that as a webinar, and we've got a few more. But, in running a business, just remember that doing nothing really shouldn't be an option. So, look at what you can do now to help your business evolve. And it probably links in nicely that we run the business Bite Business Conference, which is we tried to basically bring a city-style conference down to the peninsula. We've postponed our May 14, given the situation that's gone on. So it's now on 28th of October. Save the date. I guess the theme, Adapt and Thrive, probably couldn't be more appropriate now. And it's really looking at, just in general, look at your business and have a look and what can you do to change your business to try and find some positive out of everything that we've all just gone through at this point in time, and see how you can adapt your business. So I'll have a look at the questions that have come through. Have a look.
That was awesome, Shannon. Well done. That's really comprehensive, and there's probably a mountain of information there, and our audience is probably thinking, okay, there's a bit of that was of particular relevance to me. I wonder if, well, colleagues ask the questions. That's our invitation, and no if onlys afterwards. I wish I'd asked Shannon this question. Please hit the keyboard. It's there's a little area down. If you take your arrow down to the bottom of the page, you'll see a little Q&A box pop up next to raise hand. So if you could put those questions in, that'd be fabulous. But Shannon, yeah, terrific work, ma'am. Love your work, and there's a TV show in the making.
Yeah, there you go. And so I'll go through some of these questions. And as Bruce said, there's a lot out there. We have been putting up a lot of blogs in trying to get that information. And I guess one thing I like to focus on is taking a lot of the jargon and putting it into simple terms, and I figure if you can't explain it to a 6-year-old, you can't, you don't understand it. So that's been always my mandate. We have put it together in an ebook, which should be on our website probably sometime, I think this morning, could be even right now. But we have done an ebook on all of our blogs all together, nice little table of contents so you can easily jump into it. We'll have to keep it updated because things do keep changing. Yes, a copy of the presentation can be provided. And also this webinar is being recorded, so we can look at that. Someone's asked monthly PAYG for March. Do you need to pay it first, then get a credit, or just lodge? So what's going to happen with your March BAS? Lodge your BAS, sign your BAS and lodge it. And let's just say your BAS says that you have 5,000 PAYG withholding. So your employee's withholding of say $5,000, but your total BAS is 25,000. Now, if you lodged it today, the total amount that it would come up would be that 25,000, but you could just pay, in a sense, the 20,000 because that 5,000 will be credited off. The 5,000 won't be credited off until your lodgement due date, which if you lodge quarterly, it'll be the 28th. So it won't come off your account, but you could just pay, you just pay the difference, don't pay the PAYG withholding. Now, if you are a monthly lodger, you've lodged in January, you've lodged in February, you've paid that, then when you go to lodge your March BAS, if it includes the 5,000, so let's use that same example, you had 5,000 PAYG withholding, but you are a monthly lodger, so you've already paid PAYG withholding in January and February, that 5,000 would be times 3. So you could take off that 25,000 BAS that's owing, you would actually just pay the net. So you'd actually just pay the 10,000. You could take the 15,000 off, but the credit will come on towards the later in this month, and then you'll be able to check whether there's any difference and that you've calculated it correctly. But yeah, so you can actually do that. And casuals and part-timers who might ordinarily earn less than 1,500 per fortnight. This is the crazy thing, because if you look at the eligible employees, we're talking about eligible employees who are 16 and over, and who have been earning less than 1,500 a fortnight. The law hasn't come out, but the way Treasury's written it, they are eligible for 1,500 a fortnight. So they've just got themselves a nice pay increase. And employer paid tax on the job. I think so. I've got someone asking about does the employer pay tax on the job seeker payment or the employee? I think you might mean the JobKeeper. So does the employer pay tax? They withhold taxes on the JobKeeper payment, and then pay that across to, and the employee gets the net. So it's a subsidy that's coming across to them. So I think that's all the questions that we've got. If we've got any other questions, anyone else with questions? No, that looks like all the questions.
I'd imagine there's nobody on the call that would fall into this situation, but I raise it because my daughter has fallen into this situation. She's to the north of the city, working casually, and it would seem her employer hasn't necessarily had, let's say, full transparency to the tax office about her arrangements. So just be alert that those cashies people do aren't going to trigger ineligibility for employment as at the 1st of March.
Yeah, that is actually, I have seen that. I've had a few questions coming through at different times on that I've discovered that there are a lot of people that all of a sudden, say they don't employ people, but do, and they have been paying the cash. I think what it's going to do is that, those that have been paying cash, you're not going to be getting those benefits, unfortunately.
And that's what we found. And
yeah.
When Zoe reached out about a car maintenance payment, it became clear to me what was going on. So, colleagues, other questions? We're a little ahead of schedule, which is fantastic.
Yep, great.
Got about 8 minutes to go. So, Shannon, I think your advice about doing nothing isn't really an option. I think that's a really positive and a call to action for people to think about what their options are. But your analogy about putting your face mask on.
Oh, I didn't cover that, did I?
Some of your best work too, along with
yes,
my customer.
I've been probably saying it so many times, I felt like I spoke. I guess part of the analogy we're looking at is, really, and you would have seen that from the introductory slide, is putting your own mask on first in order to help others. So think about it when you're in the plane and they always say, put your own mask on first, then you can help, infants and those around you. At the end of the day, you really need to focus on your business and keep your business going. Do what you need to do on your business. We have a lot of economic stimulus available to us to help us with helping our employees and putting our best foot forward on it. But ultimately, you do need to put your own mask on first so that you will be there when we get through all of this. We don't know how long that's going to be. The optimism in me says, maybe in 2 months, do we get back to, being able to not in self-isolation? I don't know you know, what the situation is going to be. The government are warning us that it's going to be at least, 6 months of disruption. So trying to get your business through, and that's looking at that innovating, but, helping get your business through so your business is there on the other side to help with employees. And I've seen a lot of situations. I've had clients tell me that, their team members have said, hey, we're happy to take pay cuts. We want to see our boss's business get through to the other side because we all want to keep working here, And so I've seen some really great corporate culture stories coming out from clients that, where the whole team and everyone's rallying behind. Yeah. So
that's fantastic. Just for other things too, even while we've been on this call, just to emphasise how fluid things are, there's been an announcement around childcare being free for parents who remain employed. So, things are constantly moving. This is a tumultuous time. The other thing too, as business owners and as leaders of the business, for those that have remotely working staff, that is quite a skill set to manage that team well. And, even on LinkedIn, there are some online training courses to give guidance to how do you manage a remote dispersed team, keep the focus on priorities, delight people with service, collaborate effectively, problem solve collegiately. So there's some resources around about that as well.
Yeah, I just got one more question come through just on reiterating on the calculation of the 30% downturn and how that's likely to be. So Treasury did update it. And so what they're really looking at, there is going to be, what I'm suggesting to clients, the ATO has often, they have these risk engines. So they basically, in this instance, if they were going to look at this in 6 months time and actually have a look and say, well, what was your March BAS in 2020 versus your March BAS in 19, and has that reduced? What was it compared to, your June BAS in this year? And what's that 30 to 50%? And so obviously it's not law yet, but my understanding, and I know this is the approach we're taking, is actually looking at our client situation and saying, okay, well, your March BAS, so I've got one client that's had a lot of forward orders. So their March BAS is not going to be down, but those forward orders have just come to fruition now because this is when the delivery, et cetera, is happening, and it's come into the March period. So their March BAS is not going to be reduced, but I can tell you they've lost 80% of their business. Second week of March or third week of March, they lost 80% of their revenue, and that's going to continue for the next few months. So I look at it and say, build your commercial factors and your commercial story, because what they have actually said is that the commissioner can use their discretion. So I would suggest that putting that information on your own files for clients, if you are saying, look, I am actually going to experience this downturn. I've got one client that said to me, I can tell you these companies that normally get us through the winter months, none of them are going to be ordering because all of their businesses have been shut, and they were able to list them all down. So I'm happy to then, go through this process with them, because at the end of the day, it's actually, you have experienced or expect to experience. So I think it really comes down to the commercial factors. And if the ATO was to come in, they won't come in, now, they'll come in 6 months' time or 9 months' time. I would strongly suggest just having that information in place at that time, because it may actually you may actually find that, you think there's going to be a downturn, and then next week, in 3 months' time, things turn around, but you actually thought it was going to be reduced, So I think it's useful to just support your situation with some commercial factors as to why you've applied for these I guess subsidies.
Shannon, that's awesome stuff, and I'm sure everyone on the call is cheering you and giving you virtually socially distanced high fives as we speak. So it's just been fantastic to benefit from your insights and your experience. Colleagues, there's also been some people looking at, how best to use this time where there is a hiatus in activity or some new challenges, and Shannon's touched upon adaptation and workarounds and what that might look like. Also worth maybe thinking about, if we're through this in 6 to 8 weeks or however the window might be, and there is an upturn, just thinking about your capacity to benefit from that upturn, I know some in the retail space are imagining if there is a turnaround and an uplift, how's their supply chain? How are those codependencies within your business? Are they in good shape? Are they able to support, you know, a turnaround and an uplift as when that time comes? So they're the sorts of things that we're hearing other businesses are talking about. Finally, the Committee for Mornington Peninsula is planning to do more webinars, and we'd really value your suggestions of what would be helpful and useful right now. We know it's a tough time. We not only want your business to survive and you know, get through this, but be in a position to thrive on the other side. So any thoughts you may have, we've got on board Alina Hinton Tooley. You would have seen her email. She's our executive officer, so we've got some capacity within the office. So if you've got thoughts or observations you want to share, we'd really